Hey traders, Stephen Koitzel here with thetradersplan.com. It is Friday, July the 8th. Let's take a look at the market, and then we're going to take a look at some top ETFs of the week. I know jobs numbers is coming out here in just a few minutes, so obviously the market could change, but let's start with the NASDAQ. So let's go to the weekly chart and just kind of zoom out for a second. It's been about 3 weeks where it's really gone sideways. The NASDAQ is up 4% this week. What I thought was interesting last Friday, and I know we've had a short week due to July 4th, last Friday the market reversed off the low, okay, and kind of had a somewhat of a daily reversal pattern. And then Tuesday it did the same thing. So I sent that to my subscribers, say, okay, now it's a little different. We went from, starting weak and finishing strong at the end of the day to strong and finishing weak by the end of the day to starting weak and finishing strong back-to-back days. So that's a personality change. Now the market is really at this 50-day moving average, and a lot of more aggressive growth stuff I've seen has been popping. It seems to have gone risk on, at least this week. 1 week is not a trend, but I would definitely pay attention because we're really at a point where we could kind of break out of here and rally for a little bit. I think we could easily rally up into this zone right here, which is a pretty meaningful rally. Now, I think any rally at this point in time, you have to count it as a bear market rally. But this to me is a little promising for a rally, but I'm always taking it day by day. We'll kind of see where the market opens up next week. So if we look at the top, let me scroll here. I'm looking at the top ETFs of the week. You can see that it's all ARK, all GBTC. So you have all the risk on right here. So let's just kind of go down this list for a few minutes, and we'll look at this. The one that is really leading the way is ARK, ARKG. It's up almost 15% this week. Now, let's look at this chart for a second. You have a pretty legit, really kind of first stage pattern down here, and then a breakout. And it's above the 50-day moving average, which is the orange line. It's above all these little $34, $35 pivots, so it broke out of that. And it's looking like it's heading higher. I think it would not be crazy to say it could head up into this 49 zone, which is pretty interesting. And just to get some kind of double confirmation on the biotech space, you can see that also in the top 10 is the S&P equal weight biotech ETF right here in the chart. Not as aggressive, but it looks the same, right? It looks the same as it's clearing some pivots. Again, it's not as aggressive, but that gives it extra confirmation that it's not just one or two stocks within this ETF that is moving it. There is more of a broad broad participation within the biotechs. So that's looking pretty interesting. So we can kind of go down the list. So, for me with this, let's kind of drag it here. So right now it's like 16% above the 50-day moving average. I think that's probably your support if we get a shakeout. Maybe it eases just a little bit. Maybe this eases just a little bit, but if you can get this kind of in that 35 zone, maybe even at the lower end of yesterday's range on Thursday, I'd say that's probably a pretty good entry with a stop down here. Early in the week, I said after such a strong day on Tuesday, if things are starting to pop, a stop loss, a wider stop loss under Tuesday's low would be ideal, just to kind of protect yourself from any like single 1, 2, 3 day shakeouts that could happen, because as we know, shakeouts are abundant. Now the ARKK, this is also breaking above the 50-day moving average, not quite as strong as the ARKG, so I would focus on the ARKG, but it is now above the 50-day moving average, has been for 3 straight days. That's the first time that's happened since the end of March, and you can see March it happened right here and then failed, but we haven't had a meaningful rally in this above the 50-day moving average. I don't even know if I'd call that a meaningful rally. That was back in October for a very long time. So, with these ARK ETFs, the good thing about them is they trade like a stock. So you don't have to take the single stock risk, but they're incredibly aggressive. They're either up 6% or down 6%. So just kind of keep that in mind. The Bitcoin, I'm not seeing a buy here just yet. Like there's nothing. It is yes, it was up a lot yesterday, but right now there is no trend. Okay, so the ARKs are moving up. The Bitcoin has not made it there yet, so I'm not really taking a stab at that just yet. Now you have the UNG right here that was up 12%. I really like all energy to go down because that's good for everybody because it's so expensive. But you know what's interesting is you had a massive run, right, in that gas, and it pulled back hard and it found support. It even reversed. Let's go to the weekly chart. It reversed right at the 200-day moving average. I'm kind of trying to see if this is weekly reversal. No, it's not. It did not undercut last week's low, but you can still see that a hard pullback, a very hard pullback from 32, even down to 19, and then it just kind of bounced off that level. So do I think this is going to be a V shape out of here? Meaning, do I think that it's going to just kind of go straight up like this? Probably not, right? But if it eases, let me clear this. If UNG eases a little bit, right, and then it starts to kind of do this. I'm trying to create some very small, and then it does that and really breaks above yesterday's level, right? Now I'm starting to get interested with the stop under the 200-day moving average. Normally when it pulls back this hard, it'll try to bounce really hard, kind of create almost a W. That's more what I would expect. Maybe create some sort of W and then pull back and do that some more, and then it does that. So I'm really looking for that right there. If you want to be a more aggressive entry, you could buy this pullback, maybe see if it pulls back a little bit closer to 20. But that's probably what's going to happen just kind of based on the chart. So there is opportunity out there. The market is, in my opinion, attempting to rally. But let's be clear, most attempted rallies have failed. The market is not above the 50-day moving average yet, even though some of these more aggressive ETFs are. So just, it's okay to stick your toe in the water, but limit your expectations. And if we get, more follow through next week, that would be more extra confirmation. I'd rather pay a little bit more and get that extra confirmation than being, death by 1,000 cuts, whipsawed out a dozen times.